Ryan Reynolds here from Mint Mobile with a message for everyone paying big wireless way too much. Please, for the love of everything good in this world, stop. With Mint, you can get premium wireless for just $15 a month. Of course, if you enjoy overpaying, no judgments, but that's weird. Okay, one judgment. Anyway, give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Reality radio for a really great future. We're talking real money.
Welcome to another exciting edition of Talking Real Money, the show about money, real money, and how you deal with your real money, and the people who are always out there trying to help you deal with your money. Not a lot of them are actually trying to help you. They're trying to help you out of it. 855-935-TALK is the phone number, 855-935-8255. Give us a call, and you know what we do. If you call and you ask a question on the show, we send you one of our books. Don't know which book, but we're going to send you a book. It's the Booknenza. It's the Bookathon. It's the Book Grab Bag. I'm Don McDonald. Over there's Tom Cock, shuffling papers. You're shuffling a lot of papers.
Well, there's a lot of papers here today. I don't know why, but there are.
You really have you have a lot of papers.
Well, first of all, this article that we'll talk a little bit about from the New York Times, where you are quoted, is extensive.
New York Times
lengthy.
and Seattle Times.
Yes, well, and among other, I'm sure, publications around the country, but it's lengthy, so there's a lot of pages there. So trying to make sense of it all.
There's a lot of pages
there. It's a lot of print.
Yeah.
So
all
the news
Ron Lieber
fits.
and I,
yeah.
Ron Lieber and I, the one of the money columnists for the New York Times, have been working together actually for a couple of months on a story he was writing for the New York Times that was in large part it was inspired by a May episode of Talking Real Money.
Is that when that was? May of 2018? Was it that long ago?
End of May of 2018, wow. Yeah.
Time does fly.
Because we put the podcast up on June 1st, so we had to have done the show in May.
Yeah.
And it was the podcast that we did where, a little backstory.
Yeah.
For many, many years when I was on Business Radio Network, I often had a gentleman from Money Magazine, very responsible journalist by the name of Jordan Goodman, and he would come on the show. He wrote a book called Everyone's Money, or Everybody's Money Book, or Everyone's Money Book. He wrote the dictionary of finance and investment terms for barons. So he was a well-respected author and journalist. He would come on the show with some great information. He was very intelligent. I think he was a Columbia graduate. No, not a dummy, a bright guy. And we had him on the show to talk about a partnership, an investment partnership, an income partnership called Woodbridge.
Now, Woodbridge ended up declaring bankruptcy. Woodbridge under investigation by the Securities and Exchange Commission. The guy who ran Woodbridge ended up paying a huge fine for the fact that apparently money came in and was not properly allocated to the loans they were supposed to be making. Much of it ended up paying for this guy's lifestyle.
It was going into cars and houses. I mean, he bought Sonny and Cher's old house with this money.
Good money.
And he was paying investors with money coming in from previous investors with money from new investors. What's that called?
There's a guy named, I think it was Charles Ponzi, who came up with this 120 years ago or whatever it was.
I thought it was the Madoff scheme.
Yeah, well, it could be.
Yeah, that's right.
And so the whole thing went up in smoke along with Jordan's reputation. And now, interestingly enough, Jordan, I think due to your relationship with him, I have no idea, but he came on the show while all this was blowing up. I was shocked. I'll be honest with you. I did not think that would happen.
I asked his publicist, who, by the way, was mentioned in the Ron Lieber article as the one person in the world who was standing by him.
Can we give the name? We should give the title of this piece in the New York Times if somebody's trying to find it.
Yeah. Go look it up online. It's called "The Fall of America's Money Answers Man," subtitled "From Time Inc. to a Ponzi Scheme: The Journey of Jordan Goodman."
The Fall of America's Money Answers Man. And by the way, right now it's still on the homepage of the Seattle Times, still on the homepage of the New York Times, depending on where you get your news. It's out there. But as you say, He was a promoter of this and received, as we pointed out at the time, a whole lot. Well, we didn't know that in May. We didn't know
We
that
had
till
no
this fall,
idea. As a matter of
how
fact,
much money
we
he got.
asked.
Yeah, we did.
And he said he got paid, but I was thinking, honestly, this is how naive I am as a guy who makes in the lower six figures,
Yes.
which I've been working really hard to get to. I mean, I looked at it adjusted for inflation.
Yeah, it's not good.
Adjusted
Don't
for
do that.
inflation. I make the same amount of money I make less money than I made as a stockbroker in 1984.
That I believe.
It is adjusted for inflation. So, we're not rich people. Tom and I are not, by the way, rich people. We are not. So I was honestly thinking in my head, Jordan's, he's probably getting $150,000.
I thought $250,000.
Yeah, $250,000. He got $2.25 million.
Yeah, 2.something million.
$2.25 million.
A lot of money to pitch this to people. And here's the rub. This is why the topic is interesting. Here's the rub. When you heard him on the air, it's what you just said. He came on as an expert, a guy who knows all about the industry, here to make sure you don't make mistakes. But he was pushing this that turned out to be a huge mistake.
It was, and he told us on the show, he said, there is no way this is a Ponzi
He
scheme.
called
There is no
the
way.
SEC's investigation a witch hunt.
A witch hunt.
In the
Turns out
article.
it wasn't a witch hunt. It was actually, they admitted to it being a Ponzi scheme. But I want to explain a little bit more about what was behind the story, because I think the backstory is really interesting, and then we'll talk about who you can trust.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Only because it's ridiculously important. It is really important, and we will help you with your specific issues at 855-935-TALK, 855-935-8255. Talking a little bit about the guys who go on the radio and they pitch things, they plug things, but they act like they're these incredible experts. And that was Jordan Goodman. He was the ultimate example of it. America's Money Answer Man. He was on, get this, he was on KOA radio, 50,000 watt station in Denver. I used to be on KOA for a couple of years. Mike Rosen was the midday talk show host, very popular, huge ratings. And I listened back to a bunch of the shows, and every Monday, Jordan was on for what Mike called Money Mondays with Jordan Goodman. He was on every week, and he was touting this Woodbridge thing. And Mike Rosen even got involved in it, but he got out before it went sour.
After you read the article, which I think you should do because I think it's educational, although it's lengthy.
Oh, by the way, it's really easy to get to it. Just go to TalkingRealMoney.com. I've got a link to the article and a link to the podcast with Jordan on it.
With the interview. So here's the things. Here are my takeaways. And we're going to spend more time, hopefully, on the show today talking about how you decide who you trust. That's one thing. But if you read the article, to me, it's because we said it during the interview. The offer was 6% a year, right?
Risk.
No risk. Safe investment, and you get your money back after a year. Now, if that were true, the banking industry would go bust very quickly because why would I give it to a bank and make 0.5% where I know I'm going to get it back, or I'll give it to these guys and make 6%?
And the fact of the matter is they were claiming that they were getting an 11 to a 15% gross return.
They were doing bridge loans to people to, float projects that needed short-term capital.
Why would you borrow at that kind of rate on a totally secure project? It just doesn't make sense. Interesting thing about, and this is something else that we can talk about a little later on. Mike Rosen from KOA Radio, used to be with KOA. He was taken in by Bernie Madoff.
No.
Before, yes.
Oh, and now this one?
And then by Jordan, but he got out of the Jordan thing. But you know what that illustrates, Tom? It illustrates something we talk about all the time, the special people syndrome.
Yeah.
He's a special talk show host.
That's right.
So therefore, he deserves special investments.
Yeah.
Well, those special investments almost always turn out
to
be not so special.
Yeah, no kidding. No kidding. Yeah,
855-935-TALK is our number, 855-935-8255. We'll drift back over to that a little later, but we're going to talk.
And
what?
the cookie lady. We're going to talk about the cookie lady today. Tell you what.
You have been dying to talk about the cookie lady.
Great story.
Did you buy Girl Scout cookies yet?
I have not. Do I need Girl Scout cookies yet? No.
I think they're out. No, I definitely
Happy to support them, but no.
855-935-TALK. Give us a call, and you can call that number anytime, 24 hours a day, 7 days a week, too. Pat, you're up. Welcome to Talking Real Money.
Hi, Pat.
Hi, guys. I just, before I start, I just want to thank you for all the education I get from listening to you, and entertainment, but mostly the education.
That's very kind. Thank you.
I have been in the habit in the last, I don't know, maybe 10 years of near the beginning of the year, I kind of figure out what my net worth is.
Mm-hmm.
So
how are you doing this year?
I'm doing okay.
Good.
You know, I'm happy.
All right.
I'm happy, and I'm trying to get my husband to do it. He's not into things as much as I am, and you'll find out he has a financial advisor, a broker, and he has some annuities.
Oh,
I know. He
and
won't
my
listen
lunch
to
was
me.
just starting to
wait.
settle here. Come on.
Pat, maybe he's
He
just
will not
embarrassed.
listen to me. He will not listen to me.
Really?
Okay.
My question is,
Yes.
in figuring my husband's net worth, where do the annuities go? They're not immediate annuities. He hasn't started annuitizing them yet. So how do I figure that into his net worth?
Well, they're an asset.
Yeah, there's a
They're
value.
Yeah,
a
they're
capital
an asset.
asset. Yeah, they're like I would put them in the same category as your stocks and bonds. Are they? Is it a variable annuity? Is it a fixed rate annuity? Is it an
Equity
indexed annuity?
Yeah. What
I
kind?
think they're equity indexed, but I'm not sure.
Then I would categorize an equity indexed annuity as an income product.
Yeah,
I
that's
would
what
put
they're designed
even though it's tied to the stock market because of the narrow range of returns.
Yeah.
It's like a variable rate product of some sort.
But she
More
wants to
than
know
more
how
than a
she values them.
But
Is that the-
he hasn't started annuitizing
Right. So
them
how do you
yet.
put a value on that security?
It depends on when he got them. What you do is you take they should send you statements showing what it's worth.
Okay.
Or should send him statements showing what it's
Probably
worth.
once
now,
a
one
year?
of the things they'll show you
Yeah.
they'll show you what it's worth, but then you have to look back at the contract and see what the surrender charge is.
Because if they
Right.
tell you it's worth $210,000 this year, but you still have 5 years left on the surrender, there's going to be a subtraction of the value of that if you cashed
Right.
it in now.
Okay.
So I
That
think
makes
Correct.
sense.
Yeah. By the way, we don't do that kind of couples counseling, but we know people who do. So you could call us. We'd be glad to give you some names for that. So
I think we'd have to go
Yeah.
for a couple of years.
sorry.
Does
That was
he
too
think?
easy,
But
sorry.
by the way, Pat, I have a question. Why is he so attached to this broker and this broker's just bad self-serving advice?
Because his father in Florida had a broker with the same firm, and so when his father passed away
Yeah.
and he inherited some of his father's stuff, he kept it with that broker in Florida, which didn't really work out well because of the time difference, and so he moved it to the same brokerage up here, and the person or persons, I think there were two guys he was dealing with at the brokerage, moved to another brokerage,
Sure.
and he went with them.
Inertia.
Right, and when
that
it's
cost
inertia,
a lot of
yeah.
money, I think.
I was going to say when he moved, I'd be willing to bet. Here's what the reason firms make big offers for brokers to move from one firm to another is they look at their book and they go, "We're going to bring these guys over and we're going to get them to churn that book to take them out of those old annuities and put them in our new, better annuities."
Or
Yeah.
these funds
I don't
or those
think he
funds.
had annuities at that point, but I did notice all of a sudden in his statements for that year, there was a lot of selling and buying.
Yep.
On
That
these
was
specific
because
dates.
let me explain what happens. This is a behind the scenes look at the brokerage industry that very few people get. Pat, this is really important. When a broker moves from one firm to another, particularly a decent producer, one who's doing well, they'll go to this new brokerage firm, and for the first 6 months, year, even 2 years, they will get 80 to 100% of every commission they generate. So they have this incredible incentive to buy and sell and move as much money as they possibly can to generate those big fat commissions right off the bat.
Yeah, I believe
It's
that.
It's so anti-client. This is why we hate these non-fiduciary advisors We hate the whole concept, as does so much of the country. It's just the brokerage and the insurance firms who love it.
Is that helpful?
Yeah.
But yes, I would get those annuities. I would get a value on them. I'd make sure that if they were still in surrender, that you include that in the reduction of the value.
And then go to our podcast and very quietly play it in his ears all night subliminally. Subliminally. Maybe he'll get the message. I'll talk really low on one. I'll do a subliminal podcast. There's a great idea. 855-935-TALK.
Tom and Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information. TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
I've thought about it during the break, and I really think that Monday's podcast is going to be Talking Real Money, the subliminal.
So am I going to be behind you whispering, "Get rich quick, get rich," like that kind of thing, or like subliminal in what regard?
What I'm going to do is I'm going to repeat. I'm going to talk Fama French.
Oh,
I'm going to talk about factor investing. I'm going to talk about fiduciaries. I'm going to talk.
And
about
you're going to do it in a
fees.
low voice.
I'm going to do it in a low soothing
Okay,
voice,
all right.
so that
I want to see how long you can stay in that character. That'll be my question.
And then I'm going to put that kind of music in the background where it goes, that sleepy music.
Please don't do that yet.
Please?
Yeah.
Oh, come on.
Right.
It'll be fun. It'll get a laugh. Maybe it'll be in the New York Times.
Maybe not.
The first subliminal financial podcast.
Oh, it wouldn't be the first.
Okay. Well, here's the deal. We wanted to talk a little bit. The reason we led with the article, one, because it's kind of cool that we're in the New York Times, but two, because it brings up an important point. How do you figure out, there's all these guys and gals on the radio pitching all kinds of stuff, the pay yourself first stuff. There's just so much of it. And there's a ton of them in our area. Listen, just turn around on some of the other stations. No, don't even listen to those. But how do you know who you should trust? We say trust us, but why should you trust us?
Yeah, I think that's always because I could, especially in the last couple of weeks after retirement, the number of people that came in and sat down and said, "I trust you because," by the way, here's the reason. Because I listened to the show and you really help people. You didn't just say, "Hey, call me on Monday, we'll make it happen." Number two, I came to Retire Meet and it truly was an educational environment. It wasn't a pitch.
I know it shocks people.
And they're like,
they were going,
I didn't,
where's the sales
yeah,
pitch?
It didn't work out.
No.
But if I were you, what would I do?
We're sneaky.
Yeah, I know. But here's the thing, okay? Yeah. Number one, when you listen to anybody, and in any format, I would try to discern what the agenda is. What are they trying to? At the end of the day, what are they trying to do? Because if your money's at Morgan Stanley, there's a lot of great reasons it should be at Edward Jones, right? I mean, that's what they're trying to move the money.
It's
Number
competition.
two, how are they paid?
Ooh, that's a good one.
Yeah, I mean, follow the money. And then
how are you paid?
Here's the other one I like.
I'm going to come back to that one.
I'm sure. Where do their ideas come? Very few people on the radio sat down and wrote a book without any ideas coming from anybody else. They didn't put this all together. They found something they believed in or could get paid to, whatever it is. Find out where that stems from.
More the latter than the former.
Sadly.
Right?
But figure out, you need to ask people. What do you believe? Because we have some things we believe for 25 years that we think we can back up with actual numbers, right?
But see, when you listen to them though initially, and here's really where the problem comes in. When you're listening to, let's just use radio because that's what we know, radio and podcasts. There's a lot of radio shows and podcasts that talk about money.
Are there?
When you're listening to them, they're all going to say, "I'm here to help you."
Yep. This is educational. Yes.
Yeah. So they're all saying that. How do you that's on number one. How do you differentiate when they're all saying this is educational? This is I'm here to help you. I'm not here to sell you anything.
Well, first of all, you can say that.
I'm not saying you have the answer to this, by the way.
Well, I do, in a way. Do they live that? In other words, truly, are they actually helping people? Or is it a pitch? And that's sometimes hard to discern, but sometimes not either, by the way.
Here's the way. I got an idea. You want to test them? Give me your home address and drive by and see what kind of car they drive.
And where's the dividing line?
The dividing line is between Toyotas and Lexuses.
How about where does Tesla
Nissan's Tesla. If it's a Model 3, if it's a Model 3,
how about that
they're
gold
okay.
wing thing they got? That's
No, an X,
Yeah.
no.
Yeah.
An X,
Okay.
an X, you're making too much money.
Yeah,
If
there
you
you
got
go.
an X, you're making too
How
much
about
money.
the Honda Pilot? Where does that one?
Honda Pilot's okay. If it's an Acura, then you're on the other side of the line. You
Good
see,
to know.
that's how I divide these things. Chevrolet, Cadillac, Ford, Lincoln. 855-935-TALK.
Tom and Don are talking real money.
Do you know what your investment risk tolerance is? Take our free no-obligation risk quiz at talkingrealmoney.com.
Reality radio for a really great future. We're talking real money.
And your real life, too. How you deal with money and how people are trying to talk you into dealing with them. 855-935-TALK. That is our phone number, 855-935-8255. And here's the question for all of you. I put it to Tom. Let me put it to you. Those of you who have financial advice providers, how did you determine who to trust?
And by the way, my guess is most of it is like the conversation we just had with Pat. Most of the time, it begins with a relationship. Somebody you knew, your dad knew somebody, or somebody knew somebody. That started the relationship, right?
Right.
And your money's there. And once it's there, it's hard. I don't want to have to move it because I'm going to have to call them and tell them that I'm firing all those
Just
things.
too much trouble.
It's a lot of trouble, and it'll be okay. It's okay where it is. Which is, if that's your opinion, that's perfectly fine. The problem is,
Well, but it's probably wrong.
well, more than likely. And here's just read this recently that now the Department of Labor, fiduciary rule is gone. Guess what's being sold like veritable hotcakes? Other than
You
hotcakes.
mean like variable hotcakes?
Yeah, variable hotcakes.
Not
Thank
you
you.
mean variable hotcakes.
Variable hotcakes. Yeah, third quarter sales numbers just out. Oh, they're up 25% year over year to 25
Variable
billion.
hotcakes?
Variable hotcakes, variable annuities, and guess what? 60% of those annuities, they're in individual retirement accounts,
Yeah, of
which
course.
is just
horrible.
horrible. So that's what happens.
And let me go through my variable annuity primer for all of you.
Please.
Because people are going, why shouldn't I have a variable annuity in my IRA? Well, let me explain a little something about variable annuities. Variable annuities are stupid unless they're in a taxable account, and even then they're not so bright. But the only advantage to a variable annuity, which is an annuity that has mutual funds in it, so you get the performance of various segments of the market inside an annuity. The only benefit to a variable annuity over just getting the stupid mutual funds on their own is the fact that inside that annuity wrapper, that annuity case that they're enclosed in, because it's life insurance, you get tax-deferred income and growth from those assets. You do not have to pay taxes on them until you take the money out. What does that sound strikingly similar to?
I don't know.
Oh, an IRA.
Oh, that's it. Yeah. You don't have to pay tax on that until you take the money out.
You take it out, just like a variable annuity. But the variable annuity has the expenses of the mutual funds
And
along with the expenses of the insurance company and the expenses of the insurance company that are collected to pay back the big fat commission paid to the person who sold it to you, who, if they sold you a variable annuity inside a 401k, a 403b, or an IRA, is an incompetent idiot.
And,
Or
by the way,
greedy, thieving, blah, blah, blah.
so if those fees don't sound like a lot on average, according to people that pay attention to such things, it's somewhere around 3% a year.
Not much, just about 3% a year.
And
when
then let's
when
go
you
back
go
and
to
do the math.
Vanguard and get a mutual fund for 1/10 of 1% a year.
Yeah, go back and do the math. If stocks provide, 6 or 7% a year over time, and you subtract out
you
3,
take out 3.
starts adding up.
Oh wait, I'm down to 3 to 4.
Yeah, and
Holy cow!
so-
Wait, that's not much money.
No, it's not. So, yes, thank you for pointing out the Vanguard.
Well,
Or
I
you
just want, because people go, well, what's wrong with that? My insurance guy said it made sense. No, it doesn't, because you're paying a lot for a benefit you're not getting. Oh, and they'll throw in one added benefit, and this is the real kicker.
This is the kicker?
This is
Okay, yeah.
Oh, it just annoys the heck out of me. Well, and you can't lose anything.
Nope.
That is not true. You can't lose anything as long as you die. You have to die. Would you rather lose something or die? Yeah, and that's only because they have a life insurance policy that says
Correct.
Whatever you put in, if you die, we'll give you what you put in back. Woohoo!
Makes you feel better,
doesn't it? If you expect your investments, if you honestly think you're going to invest in something that's going to go down so that you have to use that kind of, why would you do it?
That would be a bad decision. So these are not good products, is what you're saying. By the way, you mentioned something earlier that I think is very important. Lightly regulated by state, state by state. There isn't anybody federally looking at these products, right? Like there is for investment products. These are not considered investments. Therefore, the great state of Washington, Mike Kreidler's office is looking at how sophisticated do you think they are about sophisticated insurance products, and probably not a lot.
Not a lot, no. As a matter of fact, my least favorite of all annuity products, the equity indexed annuity.
Because that you don't pay anything for that.
Oh, right.
No,
you don't pay anything
zero.
for that.
And
you
it
get
only
the return
goes
of the
up.
stock
Yeah.
market with no risk. Yeah, it only goes up. Those were going to be regulated several years ago by the Securities and Exchange Commission. The insurance industry spent tens of millions of dollars lobbying Congress to stop that from occurring so that they would only be regulated by the state insurance commissioners who, in large part, aren't the best.
Tom and Don are talking real money.
Download the advisor interview form and find out if your advisor's a fiduciary at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
This is really important stuff, and one of the things you really can't do is take investing lightly. I think a lot of people take it too lightly, that they don't properly vet the folks with whom they work. They don't ask the right questions. That's why we're talking today a little bit about how do you determine who you can trust. This is after an article in the New York Times that we worked with Ron Lieber on to talk about Jordan Goodman, who was all over the radio telling people to invest in really, really, really bad deals, almost universally bad deals. Really dangerous stuff. He really was. You remember the old Bob Newhart show where?
Yes.
Hi, I'm Larry.
Sure.
And this is my other this is Daryl. This is my other brother Daryl. Will do anything for a buck. He was the do anything for a buck guy.
Sadly, and I mean, part of it is the fact that the profession he got into shrunk. I mean, the people
Tell me
writing
about it.
articles, right, or talking about this on the air and getting paid to do so is really, really, really small. I mean, and there's so much advice out there that is basically pay-to-play kind of advice now. That's the problem.
Well, and that's that's what's so interesting about all of this is that the people who are now giving the advice in publications on the radio are often people who are not the best at what they do, but they can write a big check.
Yeah. That's it. You said that's even true in Forbes magazine?
Oh, and a lot of them now,
Wow.
they have a paid contributor network where you can contribute to their network, and it's an advertorial. It's an advertorial.
Does like MarketWatch have the same thing online?
I
or
don't
not?
know if they're doing advertorial stuff yet. I'd have to look. I
Anyway.
bet you if they're not, I bet you they're considering it because it is the future of fake financial journalism. Yeah. Boy, talk about fake news.
Indeed.
That's your fake news. So anyway, you mentioned a few things.
Well, you didn't give him the phone number for one thing.
Oh, I gave him the phone number again. 855-935-TALK, 855-935-8255. Call with a question. We'll give you a really great investing book of some kind. It's a grab bag of books. We were talking about who you can trust, and one of the things you mentioned is ask them how they are paid. Ask them how they are paid. But here's the question I've done this to some of these guys. I've confronted them. I said, how are you paid? Oh, you don't pay me. The company pays me.
Mm-hmm.
What if they lie?
Yeah.
What if they just... And Oh,
you're asking me, what if they lie? The answer is,
Yeah,
I don't know.
what if they
I don't
lie?
know. Right, I don't know. How do you fix that? I don't know.
I guess I'm asking that of the audience too.
Right.
All you listening, what do you do? Your guy, that really nice guy you were dealing with, what if they lied?
Or it's generally not a lie per se, but it's a little bit of it's gray. I didn't quite give you the whole truth here. That's the general.
Isn't that a lie by omission?
Yeah, that is. That is. But they're going to say,
think it's a
"Oh,
lie
you
by
didn't
omission."
ask about that, so I didn't share that information." You
Right.
hear that a
It's-
lot.
Yeah, but I'm telling you, if somebody says that you're not paying them for the financial advice,
That's the conversation should end.
Right, exactly.
No,
that's what I was going to get to. If they lie,
nobody's doing
if
this free.
they lie,
no.
you walk away.
Now
you do not do it.
I will say, I do have a lot of conversations with people where I help them, not just on this show, where I don't charge them and I send them on their way to do something. That does happen.
Oh, yeah, we do
But
that
we
all the
don't have any
time.
clients that we tell, oh, by the way, you get this free. That doesn't. We charge people because we have to pay Don's lavish salary to
My lavish salary,
the son there in South Florida, North Florida.
to drive my Nissan.
Oh, pardon me.
Nissan Altima.
Okay.
Nissan.
All right.
You know, it's not an Infinity. No siree, Bob.
No, so if anybody, I
looked
think
at
that
the
should conclude.
Infinities, though.
That should conclude the conversation. Honestly, that.
Yeah,
that should be it.
I agree. I absolutely agree with you. If they do not say, and here's the thing, they should, and really these are some specific questions that need to be asked of any advisor. How do you get paid? And how much do you get paid?
Well, you've
How
got that
much
great
is it?
form too, because sometimes people will say things.
Yeah.
But if you make them put it in writing and sign it, they might be a little more. They might be tempted to be more honest in that environment. Generally,
Back in the olden days, back in the 80s when
Yes.
before I recovered from being a stockbroker.
you're stringing the railroad
And I'm
across
not-
the country.
I gotta tell you, I'm not a recovering stockbroker. I am fully recovered from
Okay.
that evil industry.
Feel better.
But I was there when they invented the B and C shares. I was in the industry when those were invented. They used to just have loaded mutual funds. You paid a commission to get in.
5
And
whatever
because
percent.
of Vanguard over the 10 years from 74 to 84 was really starting to hurt the brokerage industry. So they invented these 12B1 fee shares,
Which
that
are?
they call B shares or
Yeah.
C shares. And that means, and what we were told to tell them, to tell our clients that we now had no load funds.
Yeah, there's no commission.
We were told to tell them that. We were told specifically to never put it in writing, to only hand them a prospectus and say,
Read it.
here's a prospectus for the no load funds we have. They were no front load funds. What they did is they just kind of neglected to tell us to say the word front. And that's one of the issues that much of the industry still has today. You can go to a brokerage firm that's selling American funds, and you may hear your broker, and it's funny. This quick story. There's a guy I know here in my hometown. He's at the Morgan Stanley office. Mm-hmm. Debbie really likes the guy. I don't trust him as far as I can throw him. And he was walking down the street, and I was with somebody else, and Debbie goes, hi, whatever your name is. I don't want to say his name, because he might listen to the podcast. And I go, oh, that's our town stockbroker. And he glares at me. No stockbroker.
No.
I said, yeah, you'd like to think you're not.
So what is he? What is? How does he?
Oh, they call themselves financial
Oh, I
advisors
see.
now.
Okay, no, because no one wants to be
No one
called
wants to be
stockbroker.
salesperson.
Yeah, you're just hawking stocks. Then, yeah, that doesn't work. That's a good point.
Right.
Yeah.
Yeah.
No, I'm a financial
but
advisor.
it was so funny. I'm a financial advisor. I'm not a stockbroker.
So
And
you're
I'm
not.
always going,
You're not fast friends with him. Then I take it.
No.
Okay. All right.
No.
Okay.
No. I have a problem with the fact that he lies. I do. I just have a real problem with it.
I'm just laughing. I just think it's funny that that's going on in your household. That's all. So
I know. And, you want another story? This is a great one. Hey, I have a minute for this.
Yeah.
We have a minute before we go to a break. We had a yard sale. Okay, I'm in Florida. It's 85 degrees here.
yes,
We had a yard
Make us
sale
feel
today.
bad. Yeah.
Some woman came by and was talking to Debbie, and you know Debbie. You who went to retire meet know Debbie. She's
Yep.
very friendly.
Indeed, she is.
And Debbie, I don't know how it came up, but Debbie mentioned that I was part of a registered investment advisory firm. And this woman goes, "Oh, I'm an RIA too."
Oh,
and
yes.
Debbie goes, "Well, what's your firm?" And the woman was trying to hire Debbie. Just trying to hire Debbie to work for her
Good decision.
investment firm.
Yeah.
And I'm going, Deb, do you know anything about her? She goes, "No, she's really, really, really nice. She was really
And
nice." I said,
she works?
And she claims that she said, "I told her what Vestory charges, which is 0.9%, 0.5%. Anyway,
Low.
She goes, "Wow." She goes, "That's really inexpensive. We're much higher than that, but we provide a lot of additional services."
Sure.
And I look her up, and she's one of these flippin' dual-registered people.
Yeah, of course she is.
Who's selling, by the way, she has an insurance agency, so she's selling annuities.
Yeah.
She's selling mutual funds that are actively managed and loaded. Oh, and at times, she's a fiduciary.
What are they charging for just management? Did you look that up?
Well, their management includes a lot of other things.
Oh, of course.
So 2% per year is very
yeah.
reasonable.
Indeed.
Because it includes a lot of other things. Yeah, right. Turns out her new firm isn't even officially registered yet.
Tom and Don are talking real money.
Would you like to talk to a real investment advisor for free? Set up an appointment at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And talking about the classes, our real education classes, on the 20th of March, Barbara Devereaux from Vestory is hosting Female Financial Fundamentals about the things women need to know about investing. It's a lunch ed event. Go to TalkingRealMoney.com to sign up.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?